Hello traders, this is Michael Huddleston with the Pro Traders Club entry for May 23rd, 2011. Okay, we are looking at the Fiber, and this is actually Friday's action. Real quick review on the live webinar that I held. Just a real quick overview of what a Z day looks like and how we could trade it, and it actually repeated itself today. So looking at this, one, if it's something new to you in terms of trading, you can look at this and be kind of overwhelmed and think, well, this is range-bound trading, and look for key resistance and support levels and wait for it to trade down to these levels and try to get buys and sells off of that. And that's certainly one way of doing it if you are a scalper. Okay, but for those that have a little bit longer term perspective and we want to catch swings, okay, my advice is not to abandon the whole notion of support and resistance, but we have to incorporate a concept I referred to in some of the videos, which is market structure and time of day and price theory. Okay, so when these three things coalesce and they converge, they really give you a greater perspective on potential direction of the market, at least for an interim or short-term basis, which bodes well for a swing trader. All right, looking at this low in here. Okay, this low here was actually made during the London session on Friday. Okay, here's the London session high, trading down into the New York Open and trading up into a New York high here, and trading back down to make another low in the proximity of going into the London close time frame. Okay, so we saw a high move down to a low, high, low, high, low. And for a pure chartist approach to trading, this would be referred to commonly as a triangle, pennant, or coil, as they used to be called when I first started learning how to trade. They don't usually call them coils too much, or springs, but that's what they usually call them. It kind of like shows my age in this industry, but one might well, let's look at it real quick. This is what I did in the webinar, and I asked if there was any traders in the room that actually did these types of things. I don't use trend lines, by the way. If you haven't ever really noticed, I just don't apply them to my charts. You can have faith in them and feel confident that they give you some kind of prognostication, but me as a trader, I just do not use them because I don't think that they have this much weight. Now, much like anything else, I know 50 of you could come at me with a chart and say, well, look, here's an opportunity where they call it a support or resistance level and price moves, and that's fine, but not to sound egotistical or like a know-it-all, but I'm sure I have 3 other tools that would have told me that reaction was going to happen well before the trend line was even noticeable. So I'll just give you that for as a reason why I don't use them, and hopefully this will illustrate another reason why they're not that important, at least in my opinion. Okay, so as the market clearly is moving into a tighter pennant or triangle formation, most of the time traders are waiting for a breakout of eventually this trend line here. It would usually break out and then try to retest it, and then hopefully try to catch a move down lower. Vice versa, if this trend line was continuing into the future, if price was to ever break above it, retest it as support, traders would usually try to buy that and try to chase price higher. Okay, my adventures in trading have always been leaning towards the notion of, well, there's somebody out there that's smarter than I am, okay, and they certainly have more money than I do, and they got to that point by being smarter. So they are the ones that are going to be buying or selling before the obvious breakout occurs, okay, and you can see these setups coming, a long distance ahead, and it usually starts like this. You have a leg down, a leg up, a leg down that doesn't go as low as the previous low, leg up doesn't go as high as the previous high, okay, and it starts to move down, and it starts working a midpoint level, okay, and basically it's like an equilibrium point. And what we're going to do is we're going to note that price level that we're referring to right now, and it just happens to be an institutional level 142.50. Okay, and way you determine what that is you actually take the high. Well, I have the chart set up on another frame, so we'll do that in a second. But basically, you see how price moved down, bounced off of it, traded below it, back above it. It kept basically pulling back to the center in here. Okay, this is equilibrium. And what is happening here is the market makers are pairing orders, okay, and they're building a fractal. And what happens is eventually when price has established a base in terms of net buyers or sellers, my theory is, and I'm sure if you study the price enough, market makers will basically build a base of buyers, okay, and then once there is a discrepancy, not a discrepancy, imbalance, basically, I should say, of buyers over sellers, what will happen is basically most of the money will be made in their pockets and in institution and banks by making it go lower. Okay, so basically they'll build a quote-unquote opportunity for a long, allow the market to take in buyers, and then they'll recede price, drop it lower, and clear out all those. And at the time as it's dropping, what they'll do is they'll be establishing their own positions long, and that's how smart money actually moves in the market. And you'll learn more about that in the coming weeks, but for now, this is a Z day. Okay, so you get down, up, tighter and tighter and tighter. Now, if you just looked at price like that and waited for a breakout, that's more or less a neophyte or a novice approach, which eventually will deplete your account, and it is very frustrating. If you do not know which direction to anticipate a breakout, you should not be trading. If you're waiting for a breakout, you're chasing price. And both of those scenarios will ultimately lead to a very short career in trading. So let's take a look at what this day actually looked like with the proper structure. Okay, we had that same price decline, the same price level in here, 142.50. Okay, here's a central pivot level in here, S1, right between pivot and S1 you have a mid pivot. Okay, and we are going to look at how our kill zones that qualify high probability times of the day, where market makers and traders and institutions all come together, and that's when the real magic happens. Okay, so reviewing real quick some of the basic tenets to my concepts. Usually within the first 4 hours of London session, the high or low of the day is formed. Okay, and here is the London Open. Okay, notice that we made the low of the day well within the London Open time frame that we always refer to. Okay, price trades up. Okay, now we don't want to chase price in here. Okay, this is the part of trading that new traders and less consistent or inconsistent traders can't seem to grasp. I am not in here trying to willy-nilly a long position in here. Okay, I'm going to wait for an opportunity for it to pull back. Okay, now let's look at something here. If we look at the low here and you pull this up to the high, we're talking about 80 plus pips, almost 90 pips in a price swing for London. Okay, if we take the fib, plot it up to the high, optimal trade entry is basically right in here. 79% retracement level converges with the S1 for the day on Friday. Okay, buying in here, very prudent. Also notice that it is within the New York Open time frame. So if we have the low forming in the first 4 hours of the London Open or London session, that gives us a high probability for a buy day. Okay, so as price was making a tighter narrowing of highs and lows, okay, most participants could have been looking for a short, but as a professional trader, our mindset switches to the London low, sends price probably higher into New York afternoon. So we made a higher low in here. So market structure, we have a short-term low, intermediate term low, short-term low, intermediate term low. Notice the intermediate term low here is higher than this one. Market structure now is suggesting higher prices. So we would be looking for a breakout of this consolidation or pennant or triangle formation it's been forming. Okay, keying off of our kill zones. Now let's assume for a moment, did you miss the New York Open trade? Okay, that's fine. Price trades up. Okay, fails to make a higher high in here. We still are within a Z day. If we take the fib and this simply just bring it down to this high here, move this fib tool to the low, to this high, notice we have another optimal trade entry in here at the London close time frame. Okay. Oh my gosh, did you just hear that? I just said a London close time frame that did not refer to a retracement back into the daily range. Yes, this is how you use the London close for a range expansion or breakout type means of trading. So we don't need to be looking for a move outside of the consolidation and then try to trade it. We're going to trade it right in the middle when smart money's accumulating. Okay, here is your entry in here, and let's assume that you missed that as well. Okay, you could have done this in terms of a scalper, okay, and even in here you had an opportunity to get long on the 62% retracement level, converging with a 142.50 level, okay, which is also the equilibrium point. And there you go. There's your move to the upside. Now, where is it going? Well, there's several ways to determine that. Most recent high and swing low here. 127, 162 extension. Okay, and you can see essentially that's where price went to for the day. If you were extremely bullish, you could use this high in the swing low here. 127, very close to what the previous swing extension for 162 was, and price basically went back down, traded against this old high as support, consolidated right up to R1. Okay, so that's how a Z day is traded, using the kill zones and using London close time frame to get your setup for optimal trade entry to trade the breakout before it occurs. Okay, notice there was no optimal trade entry going short. It was all set up based on where the London low or high is formed, and you just look for the close to go in the opposite direction. Remember, I was telling you the relationship to where the close of the day is in relation to the open, and usually the open and close are on opposite extremes of the daily bar or candle. And you could have caught this extension in here, and ultimately there's your price move here. Now, in the in the webinar, I was actually referring to this price level in here, okay, as it was forming. And I suggested that we may see a short setting up for the London session. So let's go back and take this fib off so we can cover that. Okay. Price traded down, went back above previous day's high in here. And actually, I just remember what I suggested that we were looking at Friday's action. This was Thursday. This is actually Friday. Sorry, I apologize for that. So basically, the market made its high for the day in London, and price setup moves going lower into London close. Now, the way we want to use optimal trade entry for trend following, which is a trending day here, okay, all you're going to look for is nice swing high, swing low. We got our fib, pull it down. Okay, so we have a price swing down here, consolidation, optimal trade entry right in here, right in the New York open time frame. Just check your charts, you'll see that that's exactly what this is, and how far is it going to go, and where do we look to take profits. Grab your fib, pull it from the low to the high. 162 extension in here, very good reason to look to cover around 141.80, which is institutional level as well, and you could have reached for S2. Okay, and let's take those off. Optimal trade entry up here, I didn't cover that real quick, but it's there. You have a failure to get to optimal trade entry in here for a London close, so this is a missed opportunity for the fiber. Okay, and we have Sunday's gap opening in here. Price trades back up into the gap, trades down. Okay, and not that I like to use it on Sundays, because basically Sunday is just an opportunity for me to fade a gap or fill a gap. But you can use this here to illustrate the effectiveness optimal trade entry is. Actually, I should use this high here. Sorry, guys. Here's the high for Sunday's open, and trades down, makes this low here, trades up, and we are looking at a swing of essentially 40 pips, so that's tradable. Even if we get back down to this point here, that is a good opportunity to at least get 27 pips or so out. And optimal trade entry was right in here and moved lower, and there you go, we have a nice little swing going into Monday's opening. Trading at this is New York midnight time here, going from Sunday into Monday. Alright, this is the trade I took today and Monday. Okay, we had price dropping into London. Okay, and here is the London window of the London open we look for. Okay, so price made a low in the first 4 hours of London, so we are looking for what type of day? It's going to be a buy day. Okay, and notice that we started to trade up trade down, trade up, trade down, trade up, trade back down. Real sloppy and choppy, okay? But if you're just looking at that, yeah, it is going to be a mess, okay? But if we look at our windows, here is our New York opening time frame in here. And this is our London close time frame in here. London low to New York open high. Okay, see that swing in here? Let's measure that real quick. In terms of potential swing, we have almost 70 pips roughly. Okay, very good profit potential if we get a optimal trade entry, which occurred in here. So even if we get profitability up to this old high, okay, we look to make at least 40 pips or so. So that's really good. Now, assume for a moment you missed this one. Okay, what you do is you take your fib, because we're looking for a buy in this day only, because the London low was formed. Okay, another optimal trade entry which occurs right at the S2 level for today, which is in the buy zone. We are below the central pivot. Central pivots are way up here. Okay, so we are definitely in the neighborhood of a buy. Okay, and you can see that price had nice reaction, taking out the stops right above this high here. A couple times stabbed above it and then traded back down into London close. Okay. Notice that we are not in a day where we've traded up, then we can trade a London close back down into the daily range, or that we've traded lower waiting for a bounce and the London close trading back up into the range. We are within a Z day type formation. We go back to that same premise we used last week in the previous example here. You just use the London close for a time frame to get long, using the high in New York open, and New York opened the high here. So we have the low and high of New York session. Optimal trade entry right in here, which converged with S2, so buying long in here. Okay, even if we get back to just this high here, which is first objective, okay, it's very favorable. Another 40 pip plus swing opportunity in here. Now, how high is price going to go? Getting long on any one of these. Okay, you take the high, pull it down to the low. Here's your 127 extension in here. 162 is just a little bit above S1, which would take you above the high of the day, which is not out of the ordinary, but when you have a day like this, you just want to take a reasonable price objective, and this is one in here. I actually had a limit order to get out at 140.50 just to be safe, even though I had objectives calling for the high here. It just didn't give me an opportunity to get too excited about it. So that's how price reached for 127. And if you used the initial London swing to give you your objective on the upside, okay, you would have had your 127 in here. Notice I had a lot of difficulty getting above that. And then between 162 and 127, which is kind of like an optimal trade entry exit strategy, like I was telling you before in previous videos, right in the middle of that area, we can reach for, and it obviously did that here. So, but my entry was actually down here, and at 140.04, and exit was 140.50 on the limit, and that was the trade for today. If you look at your cable, which we're not going to do now, but if you look at the cable, there was a lot of divergence in the lows in this vicinity in here, and you'll see how there was accumulation going into this morning, so allowed for a buying opportunity. Several of them actually, and this is how you use your tools and your time frames to get in line with today's direction. Even if it's not a trending day, you still can find a favorable and profitable day. And with that, guys, I wish you good luck and good trading.